Are you seeing signs of inflation beginning to increase? We're seeing very substantial inflation. It's very interesting. We're raising prices. People are raising prices to us. It's being accepted. I mean, it's not to take home building. I mean, the cost of we've got 9 home builders in addition to our manufactured housing thing, and then operation, which is the largest in the country. So we really do a lot of housing. The costs are just up. Steel costs, just every day they're going up, and that there hasn't yet been because of the wage stuff follows. I mean, if the UAQ writes a 3-year contract, we've got a 3-year contract. But if you're buying steel at General Motors or someplace, you're paying more every day. So it's an economy, really, it's red hot, and we weren't expecting it, all our companies. When they thought when we're allowed to go back to work, however, his operations, we closed the furniture stores. I mentioned, if they were closed for 6 weeks or so on average, and they didn't know what was going to happen. When they open, they can't stop people from buying things, and we can't deliver them. But they say, well, that's okay because nobody else can deliver them either, and we'll wait for 3 months or something and start that the backlog grows. And then we thought it would end when the $600 payments ended, and I think around August of last year, it just kept going, and it keeps going, and it keeps going, and it keeps going. And I hate the figures every week. I call me, and we go over day by day what happened to 3 different stores in Chicago and Kansas City and Dallas. And it just won't stop. People have money in their pocket, and they pay the higher prices, and on the carpet, prices go up in a month or two, And that was the price increase for our costs are going up. Supply chains is all screwed up, for all kinds of people, but it's almost a buying frenzy except in certain areas you can't buy it. You really can't buy international air travel and theirs. So the money is being diverted from a piece of the economy into the rest, and everybody's got more cash in their pocket than except for meanwhile, it's a terrible situation for a percentage of the people. This suit. I'm wore to suit, for a year practically, and that means that as a dry cleaner nurse, it just went out of business. I mean that nobody's bringing in suits to get very clean, and nobody's bringing in my church, the place where my wife Bill's a small business person. If you didn't have takeout and delivery services for restaurants, she got killed on the other hand. If you got takeout facilities done, the same source sales of dairy cleaner up a whole lot, and they adapted them, but it is not a price-sensitive economy right now in the least. And I don't know exactly how someone shows up in different price indices, but there's more inflation going on than quite a bit more inflation going on than people would have anticipated just 6 months ago. We're thereabouts, yeah. There's one very intelligent man who thinks it's dangerous. That's just the start of inflation is going to affect you, it's certain. We will have inflation over time. And we are following policies in this country now to stimulate things that stimulate business, which is bound to have some inflationary consequences, and to the extent that we borrow money from the rest of the world. It would be very human on the part of politicians in the future to decide that they would rather pay the rest of the world back in dollars that are worth far less than the dollars they borrowed. I mean, it's the classic way of reducing the impact and cost of external debt, and we're building up a lot of external debt. I always find it interesting when politicians now talk about using the taxpayers' money to do this, and the taxpayers' money to do that, and how the taxpayers are paying the bonuses at AIG. We haven't raised taxes at all in this country, I mean, taxpayers are paying nothing beyond what they were paying a couple years ago. As a matter of fact, the federal revenues this year, which was close to $2.6 trillion a couple years ago, maybe more like $2.3 trillion, so we are taking less money for the taxpayers. The people are really paying for the things we're doing now will probably be the people who are buying fixed dollar investments, much of it from the U.S. government, and who will find the purchasing power when they go to redeem those investments to be far less. So you might say that the AIG bonus is probably the Chinese are the people that are ultimately paying the most in terms of the loss of purchasing power they will have with their holdings of government bonds, U.S. government bonds, many years down the road. But it sounds better to say the taxpayer than to say the Chinese are paying for it. It's an interesting situation. I read that comment every day about how the taxpayers are doing this, and that So those are the great assets, your own earning power first, and then the earning power of a wonderful business. That does not require heavy capital investment. That requires heavy capital investment, you get killed in inflation. And with those guidelines, I would tell you the best thing to do is invest in yourself, yeah. So the young man should become a brain surgeon and invest in Coca-Cola instead of government bonds. If you discount it back and you're discounting at present interest rates, stocks are very, very cheap. Now the question is what interest rates do over time, but there's a view of what interest rates will be based in the yield curve out to 30 years, and so on. It's a fascinating time. We've never really seen what's shoveling money in on the basis that we're doing it on a fiscal basis while following a monetary policy is something close to zero interest rates, and it is enormously pleasant. But in economics, there's one thing always to remember: you could never do one thing. You always have to say, and then what? And we're sending out huge sums. President, on Wednesday, 85% of the people, we're going to get a $1,400 check. We're about on 85% in a couple years ago. We were saying 40 of the people could come up with 400 of cash. So we've got 85% of people getting those sums, and so far we've had no unpleasant consequences from it. People feel better. The people who get the money feel better, and people are lending money don't feel very good, but it causes stocks to go up. It causes business to flourish. It causes an electorate to be happy, and we'll see if it causes anything else, and if it doesn't cause anything else. You can count on it continuing in a very big way, but there are consequences to everything in economics. But that is why the Googles and the Apples, when we don't own Microsoft, but they are incredible companies. In terms of what they earn on capital, they don't require a lot of capital, and they gush out more money. And if you're trying to find bombs that gush out more money from that federal government, only got 100 billion physical shooting out like 30 or 40 million dollars a year, or whatever it may be depending on the short-term race. It's so that puts the pressure on, which is exactly, of course, what the monetary authorities want done. And $1,400 does mean something to them, so we'll see where it all leads. But it's Charlie, and I consider it the most interesting movie by far we've ever seen in terms of economics, don't we? Really, yes. And the professional economists, of course, have been very surprised by what's happened. It reminds me of what Churchill said about Clement Attlee. He said he was a very modest man and had a great deal to be modest about. And that's exactly what's happened with the professional economists. They were so confident about everything. Turns out the world is more complicated than they thought. Keynes said it many years ago, that it's an invisible tax that only one man in a million really understands, and it's a tax on people that have had faith in their currency. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to my channel before you go.